In this track and trade trading training video, I want to take you through and just quickly show you how we can use the seasonal nature of markets to help us make our trading decisions. So here we are looking at natural gas. Now, natural gas through this time frame, if we notice from September through into January, is generally quite flat. We don't see a lot of trading activity, no extremes in here, nothing going down into a lower trend or up into a higher area. So if we come in here to the settings for the seasonals indicator and we set our thresholds, we don't see anything really getting us excited about trading this market right here. And of course we look at the market, and seasonally speaking it seems to be doing the same thing. It's kind of in a low flat mode that doesn't really get us all excited. So this is what the seasonals indicator can do for us, because it helps us keep us out of a market that doesn't really trend during any certain times of year. Now if we slide the market over, look at what's happening. The market is going to change, or has a tendency to change. Now, just because it's done this in the last 10 or 15 years doesn't mean it's going to do it again this year, and that's very important for you to understand. Past performance is not indicative of future results, but it's the best we've got. And we have a tendency to do it over and over and over again, so it's the closest thing that we've got. So we use it as a guide. Now I want to make sure you use it as a tool, not as a crutch. So now as we come along, we're going to look for and anticipate a rise in price starting right here relatively soon, aren't we? Right here looks like the very lowest point. Now I like to come in and draw a couple of lines in here, and I like to identify the lowest point of that seasonal trend. And this looks like on the 10 years the one I like to go off of. So I'm going to turn off the horizontal line, and from that point to this point is my time frame. So it's right through this time frame, right in here, that I want to be able to look to take advantage of this market, a possible rise in price. And so now I don't want to just go and jump into the market randomly and say, well, the price has a tendency to go up during this time frame, so I'm just going to get in with a market order. No, I still want to use my other indicators, and I still want to look for an opportunity to get into the market. I need some kind of a trigger, something that sets me off that says the market's about to rally and about to rise. So I sit still and I wait. And another thing I like to do is I like to scale it out and look at it from a longer scale. Notice that if you scale the market out a little bit, you can see the more exaggerations of the different types of trends. And you'll notice that this has had a nice little rally here, a nice little downtrend here, and notice that that falls in nicely with our seasonal average. And so the market's actually following the seasonals quite well here, and so I feel like there's no reason why it shouldn't continue. Notice a little rally here, we got this little rally right in here. And so because the market's been following the seasonal nature so strongly over the last 6 months, there's no reason for me to anticipate a change from that. Now if it was going wildly strange back there, I'd be a little bit more cautious, but since it's going quite strongly, I feel like there should be some kind of a rally coming during this time frame. Seasonally speaking, that's what we generally see. So we want to start looking for a setup and a trigger so that we can then follow through with the seasonals. Now I'm going to zoom this back out just a little bit so we can see a little bit better. But we're looking for an opportunity for the market to rise. So let's step the market forward. And yellow, 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 green. That's a buy signal. That's a buy signal coming in right at about the right time from our bulls and bears indicator. Now the bulls and bears is my favorite indicator, so one I like to use in combination with the seasonals. To me, I think they go hand in hand with each other. I don't know how you can use one without the other. You need both. And so this is the trigger that I like to use when trading the seasonals a trend. I like to find a trigger. Now this is my trigger. Going from yellow to green is a buy signal. So I'm going to come in here, and if this market continues to rally, I'll get in the market. So I'm going to buy one contract. Right now, let's just get in with one. We won't get too fancy. And I'm going to put a stop in there. And if the market rises, I'm going to get in. Now, the market dropped back down, so because I used a stop order, I didn't get into the market. And I'm going to step the market forward again, and it didn't get in. And we're still sitting there with our order. The market's going sideways a little bit. If it continues to break above that green spot, I'm going to get in. Nothing happens. Notice the seasonals. It says not until this day do we start to see this rally start to take place. But we have our stop in. Now we're into the market. Now we can come in and we can place a stop. And I'm just going to place a stop right back here below this lowest green. We could put it behind the yellow or clear back here. But for me, I like to have it looks like a good spot would be right behind that first green, that lowest green price bar. I like to put my stops back behind areas of support and above resistance and things like that. So we're going to come in here, we're going to say sell one, stop if we're wrong. And as that market moves forward, we can make our decisions on what we're going to do with our stop orders. We can either move it up or hold it where it's at. We might want to move it up a little tighter or just leave it right here. But notice that the market has a tendency to move a little bit up and down. We got a little down spot coming in here. We got another, then the continued up big rally up in here, and we're seeing a kind of a little spike up in here. So as the market moves forward, now starting to come back against us a little bit, and we pulling back, and there it's gone back up a little bit. Oh, now we've gone back to yellow. Yellow was back to a neutral position on the bulls and bears. So we're going to hold still, hold still, hold still. Did we get stopped out? No, we didn't get stopped out. We had our stop held right behind the lowest point of that green price bar. This yellow price bar came down and tested that area. We didn't get stopped out. Had we been held our stop up a little tighter, we might have got stopped out up in here. Had we pulled it up a little tighter, even we might have taken some profit. But this would probably have been a loser had we been stopped out. But notice it went yellow, turning back around to green. That's another buy signal. If we wanted to, we could actually come in here, and since yellow to green is a buy signal, we could say, I want to buy another one. We can come over here and look at our accounting. And now as this market starts to rally forward, we're in good shape. We got one stop. Let's see, what we need to do is we need to put another stop order in here to protect ourselves with this other contract, because we're now long two. We'll sell another one. So now I have my two stops broke apart. I can suck this one up a little closer, maybe this one here. Now as this market starts to rally, oh, come back and stopped us out. Now we're coming back again. And why is it not, taking right off just like the seasonals? Well, maybe it's following the seasonals a little bit more closely. Notice this has a little room to go sideways. Notice right through this time frame here, it goes sideways a little bit, doesn't it? Right through here, we have a little bit of a sideways market. So maybe we're a little early, a little premature before the big run starts out here, maybe. So these are things that we can watch for. We can use this as a guide to help us, but we're using the bulls and bears. Look, this is actually, let's back up one. Yellow to green, that's another buy signal. If we wanted to, we could come in here. We could drop another order in here, buy one on a stop to get in. And as the market begins to rally, now we're in again with another stop, so we need to come in here, put another stop order down here, sell one. Let's remove this one. And now, move our stop up in there. We're long two contracts. We're still doing pretty well. We're up $7,000 on this trade. We've been stopped out a couple of times, but that's okay. We hold our stops tight, take very tiny losses, and let our winners run, and that's the name of the game, right? We're not going to win every single time. Everything's not going to take off beautifully for us, so we have to realize this, and we have to use this information to help us make our trading decisions. So now as we move the market forward, we can rally up with it. Now there's a number of different things we can do at this point. As this market starts to rally and it looks like it's going to start following the seasonal trend, we can start using some different tools, some different overlays. With the bulls and bears, of course, comes the blue light system, and we can go in here with the blue light system and we can turn that on. Or we can come in with the a couple of other overlays. We can come in here and we can turn on the parabolic SAR. And the parabolic SAR is a mathematically calculated point where we can place our stops. And I'm going to come and look at the parabolic SAR settings. And let's see, I want to go to overlay to parabolic SAR. And that looks good. Let's come in here and turn on the bulls and bears settings. Let's see, to the bulls and bears, I want to see the chart properties. So I want to go overlay properties, bulls and bears. And I want to turn on the blue light. Let's turn on both bullish and bearish. There we go. And you can see I've got two mathematically calculated stop placements. One is a blue light, and one is on this red light. And I like to keep them so they're separated, but they're both mathematically calculated. Now as the market moves forward, I can move my stops up with these mathematically calculated stop placements because I'm in the market. I had a couple of little rough starts there, but that's okay. That's kind of what we anticipated. We would get into the market, we take our position, and now as this market starts to rally a little bit, we're going to take advantage of this move in the market. And hopefully it'll continue to follow up that seasonal trend. Now I'm going to come in here and I'm going to go settings on this order, and I'm going to tell it to trail the parabolic SAR. Hit OK. And on this one, I'm going to come in here and I'm going to go settings, and I want this one to trail the blue light system. So now as I step the market forward and as that market moves, you'll notice that it'll automatically recalculate for us where we're supposed to be placing our stops for each trade. And those numbers, of course, are listed right up here, and you can use those to talk to your broker to place your stops and know where to put your stops, or to enter them on your electronic order entry platform, whichever you may choose. So now as that market rallies, notice that we've got two different stop locations. So if this one pops back down and takes us out, we're not all the way out of the market. We're still in the market, still making some money with one that's pulled a little bit further back, and of course it's broken. It's above break even, so it's actually in the money and making profits as well at this point. So now as the market continues to rally, we use our trading strategy to take advantage of this opportunity, and this one bar got us out of both positions. It rallied up through the time frame in which we anticipated. We took our profits, and of course in this market with two contracts, this is a relatively large market, natural gas, so that's a $25,000 profit on this nice little setup and run right up through here, which was given to us through the bulls and bears combination with the seasonals trend.
The content of this program does not constitute investment advice. This program is to help enlighten you to the opportunities for further education and training techniques by industry leaders. This should not be considered as a solicitation to buy, sell, or invest in securities, options, futures, or Forex. Remember, trading does involve the risk of loss. Past performance is not indicative of future results. Stocks, futures, options, and Forex trading is not suitable for every investor. Please consult a professional regarding your financial situation before placing a trade.